Alright, hello and welcome to Camel Finance. I'm your boy Camel, and I don't know why so many people choose to live their life always expecting more downside. I prefer more upside. Life is better that way, and that's kind of how I feel. That's not to say you should just be a perma-bull and disregard bearish price action, but I do think your life is more positive if you can try to have a positive outlook, and that includes price action. So anyway, food for thought. So yesterday we had the Fed minutes, and substantial majority of the Fed officials see rate hikes slowing soon. So this is starting to look good for this melt-up thesis to play out. We've also had the US initial jobless claims come in above forecast and the previous. Okay, 240k above the 225 forecasted and the prior month at 222. So this also tells us something very important. This tells us that one, the Fed is possibly going to start slowing the rate hikes as per the minutes. So maybe we're done seeing 75s, maybe we can start seeing 50s and even 25s in the not too distant future. Also, this joblessness is telling us that, remember their mandates, they had two major mandates they were sticking to. The first one was they are targeting 2% inflation, and the second one is they want to see the joblessness go up in order to help stem this inflation. So the fact that we have jobless claims going up against a backdrop of CPI coming down tells us that the Fed is likely going to be able to start to claw back some credibility here. It's likely going to be able to start to say things like it's happy and content that it's got inflation under control, it's achieved what it wanted to achieve. Bears at the moment are not happy. They're not happy, they're angry. You can see here Powell is a joke. The bears are incredibly frustrated and confused. Okay, this can't be happening. And I've been saying all along that if this rally were to occur, it would likely be one of the most hated, the least understood, the most shorted, the most doubted, and the angriest rally of all time. And that is because it just doesn't make sense. It doesn't make sense to be targeting new highs in the stock market and indeed crypto. I know that makes even less sense now against the backdrop of everything blowing up and the liquidations from FTX. But none of this makes sense. The list of worry is huge. There is recession fears, growth fears, there is inflation fears, Fed policy is insane. There are foreign stresses, geopolitical uncertainties. Every day something new comes up. Every single day something new comes up, and you can find 1,000,001 reasons to be bearish, and I would agree with those 1,000,001 reasons to be bearish. But often markets don't make sense. And this is why TA is essential, technical analysis. When you learn to read the charts, you can learn to call BS on the mainstream narrative. Having a good set of technical analysis skills is essential to be able to navigate markets and not get left behind and not cling to this bearish narrative and all. But the Fed, bro, I understand. Like I said, all of this stuff I completely agree with. None of this rally makes sense, but that does not mean the rally is not going to happen. Okay, so it's important to understand that. If you want to learn the sort of technical analysis that has led me to be able to understand that it's time to call BS on all of these mainstream narratives, then make sure you hit that subscribe button and turn the notifications on. We've got a little bit of news before we hop into the charts. The Starling Bank has banned transactions to Bitcoin exchanges and merchants in the UK, saying that these are high risk and heavily used for criminal purposes. So this is not great, but I wanted to point at this and laugh at it really, because wasn't it the UK that was just recently saying they want to become a hub for crypto innovation? So what happened to that? Japan is launching its digital yen, a CBDC pilot, in 2023. And of course, this is just around the corner now and comes at a time when we have just seen the US, the Fed, has just begun launching its CBDC pilot. So these things are incredibly close now. These things are being rolled out right beneath our noses. This is no longer conspiracy. This is absolutely happening in front of us in real time. You better opt out and you better do it quickly. New York has banned Bitcoin mining for another 2 years. So it's quite strange. This is completely different to the Texas take on Bitcoin mining. They are, of course, embracing it. They're making loads of money. The government is holding Bitcoin. They are profiting from mining. They are cutting taxes for mining. So, but I guess that's the sort of thing you get with different states. Different states have different laws. It is what it is. Over in Harvard University, they are writing papers to say and explain why banks should hold Bitcoin. And I just wanted to bring your attention to the first sentence or two of this. Look, central banks may shift their international reserve holdings in order to protect themselves ex ante against the risk of financial sanctions by fiat reserve currency issuers. For example, from 2016 to 2021, countries facing a higher risk of US sanctions increase their gold share of their reserves more than the countries facing the lower risks of US sanctions. This paper explores the potential for Bitcoin to serve as an alternative hedging asset. So there you have it. What happens when these banks decide they want in on Bitcoin? I think you know the answer. The market cap is going to explode, and so is the price. Over in Russia are about to launch a cryptocurrency trading platform. It is no coincidence that right as we enter these bear market lows, I'm not saying the low is in for sure, but right as we're in the neighborhood where we would expect to find a low within the next couple of months at least, assuming it's not in already, it's no coincidence that right at these levels, we're seeing these banks start to step in. We're seeing Russia start to launch these platforms. I've been making these videos almost every single day since March of this year, and I can tell you that there has been absolutely no shortage of this sort of news. Once these big boys are all completely in, once they are ready for this bull run, you best believe it's going to look unlike anything we've ever seen before. It can often feel like it's been a very, very long time since we've seen a high, and indeed it has. However, as you can see here, we are right in the neighborhood where you would expect to start to find a bottom. And you can see that here from the Williams percent range oscillator as well. We are also right in the neighborhood where you'd expect this to start turning up as we emerge out of this base. Very, very interesting times ahead, says Plan B. And I wanted to point this chart out because this is very interesting to me. One of two things has to be true here. Okay, the red is the Bitcoin price. The gray is the logarithmic regression, and the whiter one that chops around up here is the stock flow model. So looking at the price in red, one of two things has to be true here. Either this model is completely broken. Okay, that's the first possibility. Now, is that the case? I don't know. That remains to be seen. I'm sure a lot of people would like to argue that yes, this is indeed broken. However, I bet those people did not argue when we were broken to the upside. So that's one thing to point out. If, however, this model is not broken, and I don't know, how could anyone know at this point, but if it's not broken, then isn't it only reasonable to expect an aggressive mean reversion? An aggressive mean reversion to 100k-ish, at least, seems like the most reasonable thing to expect if we assume that this model is indeed not broken. For it to just sort of trend down here for a while, I don't know about that personally. But anyway, I thought this was a very interesting chart. It will be really interesting to see how quickly we can snap back to the mean, assuming this thing is not broken. Are you a small trader? If so, beware. The small trader put call premium 20 period moving average is officially at its second highest level. You've been warned. And so going back here, where I said that this would be the most doubted and the most shorted and the most hated rally, okay, most shorted, you can see that that's absolutely right. Every time the stock market puts in a higher high, small traders buy more puts. They continue to short this market, they continue to hedge this market, they continue to bet on lower lows coming. This is not a good look for the bears. And here again, you can see the equity put to call ratio back above 1.3. Every time this spikes up, a short squeeze happens and stocks fly, they rocket. And this is true of Bitcoin too, usually. Bitcoin not taking part because of the whole FTX drama, but I have a funny feeling it's going to catch up pretty soon. That, of course, remains to be seen. One thing we do know, though, this, again, not a good look for the bears. Hopping back to this slide here, I've said this would be the least understood and the most hated, the most doubted, the angriest of all time. And that is indeed because everyone is expecting a recession. Absolutely everyone. This is the most anticipated recession in history. Everyone, including the Uber drivers, are short stocks. You can see here, look at the amount of people. I mean, this is off the charts. This is 2008, the financial crisis, dot-com bubble back here. This is the C19 era. I mean, this is completely off the charts. This is not the sort of look that you usually get when we enter severe downside periods for the stock market. The DAX and the S&P bottom together, and now the DAX is breaking higher. So why should the S&P not follow? You can see here, DAX broken out, pushing up aggressively. S&P, I think, will likely follow soon. We'll get to the charts in just a moment. Container rates and container traffic collapse, manufacturing PMI and ESP growth are all plunging. The slowdown in economy only enhances the pivot narrative, which drives risk assets higher until the Fed actually pivots. The real pivot is extremely bearish and credit will freeze. So again, if you're not familiar, if this sounds confusing, I've put a video out a couple of days ago that explains all of this, so you can go and check that out. The thing to pay attention to at the moment, global container rates falling off a cliff. Container traffic also diving off a cliff. And global manufacturing PMI also diving off a cliff. None of this tells us to expect higher CPI prints in the coming weeks. Of course, if we were to see one, that would be absolutely devastating for risk. The recent rally in the market is unlike past rallies. Bond yields are confirming this move. I'll get to the charts in just a second. Buckle up. Bond yields are indeed confirming this move. So, hopping into some charts, the dollar looks to be that we have started this dead cat bounce I was talking about. So that is really positive. That's what I wanted to see for risk to come on. So far, so good. We can see also in the 10-year yields, maybe a double bottom setup here, but as of now, speaks more to rollover, perhaps something like this. Remains to be seen, but this is certainly a better look for risk assets than this would have been or than this would have been. So happy days there. And looking at the 2-year yield, remember I was saying I wonder if we're going to do a head and shoulders pattern. Seems to be possible. Doesn't mean that we couldn't wick out of here, but we haven't wicked out yet. Geo, what I hope will be our super performing stock, is breaking out and continuing higher. So long and strong continue to push. We love to see it. Bitcoin kind of looking like it wants to complete a Wyckoff spring, but it hasn't done it yet. So again, that remains to be seen. Hop into this other Bitcoin chart so we can see what's going on a bit better. Still looking for longs, but I do want to recover this low from back in the summer here. So for now, kind of in no man's land, could really go either way. I think if we were to convincingly break down below this white line, that will open up the lows that everyone wants, the 14 and 12k lows. But all the while we're above this low, then likely we're going to go higher over the next couple of weeks. Not interested in any Ethereum trades until Bitcoin can recover its Wyckoff spring. The XRP trade, I'm interested in adding back above this red line, but we're not there yet. MATIC, still kind of pushing this trade, see what we can get, if anything. But again, if Bitcoin's going to roll over, then this will likely follow it. I did add a trade for Zcash, so looking for a potential back test of this line here. So this, to me, is just a lot of strength. This is a lot of strength. I wonder if it's following Litecoin. I wonder if it's going to push up. Well-defined risk. So I thought maybe this is the time. So gold, I covered my short yesterday as we broke out from this downward sloping trend line, as I said that I would. So covered the short for a small bit of profit. We are back to long, looking to push this. Still not entirely clear to me whether we can call this a cycle low, and therefore we just completed a full daily cycle there. So I wonder if this is one possibility. Or it's also possible that this is the cycle low, which would actually make much more sense from a count perspective here. And therefore, we may well only have just seen a half cycle low and possibly be looking to repeat this whole fractal all over again. Something like this. So I wonder if this is what's coming. That would be like the best case scenario. Either way, we have covered the short for profit. We have used the trendline break just as we used the trendline break to get out of the initial long. And now we're back to being long and strong and continuing to push this trade. I'm also long silver, as I've publicly said a couple of days ago. So long gold and silver. The miners speak to strength. As you can see here, this is the gold senior miners. This speaks to strength, doesn't it? This looks constructive. So does the junior miners, and so does the silver miners. So all of this starting to look really good. I think whenever we can get a clear daily cycle low for gold form, then I think we can start to entertain some minor positions. But for me, I'm happy with the exposure I've got just at the spot gold and spot silver markets. Still have my Apple position, which is doing a whole lot of nothing, but that's fine. Tesla working its way right up into this support line, resistance line here. So is it going to think about breaking out? Can we have another crack at that? That remains to be seen. Here's Marathon, still waiting for Bitcoin to confirm its spring. Same is true of Riot. You know the deal with MicroStrategy, looking to maybe average this down if I can confirm a Wyckoff spring in Bitcoin, and the same is true of Coinbase. The UKX continues to push on up, so is some level of pullback due before too much longer? I would think it will at least test the highs before it can pull back, and then maybe it can go again. I'm looking at the VIX here. You can see the VIX just really compressing. Again, not speaking at all to risk coming off just yet. Dow Jones, not only have we had a powerful trend up here, but we've then broken out, retested this plenty of times, and now we're pushing onwards. So hard for me to be bearish with the Dow Jones looking like this. Tech, I think, wants to start catching up. So we're back above this big green level here. I think it can start to push up, and if we can take out this high from back here, I think then we've got a good chance of gaining a couple of thousand points pretty quickly. The S&P, again, new highs, new local highs, so this is a good look. I think we'll at least make it up to 4,100 and possibly as high as 4,300 over the coming days, and then we can drop down into this cycle low and see what happens from there. So overall, quite constructive looking for most assets. It's a real shame about crypto, to be honest, because you'd think with the stock market performing like this, crypto should have been really enjoying some massive gains. I do think likely this is all a bunch of games being played by the higher level people. and I'm sure that Bitcoin will play catch up at some point over the coming weeks or months. If you found value here today, I'd appreciate it if you could drop a like on the video and subscribe if you're not already. Turn those notifications on if you want to see how I deal with these markets in real time as a pro swing trader. If you have anything to say, throw it down in the comments, and if not, enjoy the rest of your week. Take care. All the best from me. Cheers. Bye.